Top of them, you see a top cap of them. Now below us and them can't buy a bed. Hype them hype. With them friend things, we no frightened if we boy not a link. Them pussy not no cash. Broke what you have, what you know about squash. What you know? 80 grand when me pay for me watch. US. I be a ride from a put pan the block. Woof, woof, woof.
So yeah, it's that time again, man. It's that time again. I know it's been a minute since I posted a YouTube video, but like what, a couple months now. But I'm really active on YouTube, bro, because I got too much going on to record a video, edit a video, and all of that. That's why I always tell y'all to follow my Instagram. I will be posting all my trades there, my lose, wins, my break evens, everything. I'm always active there when I'm not active here. So go check out my Instagram. But yeah, so I passed this funded firm. Alpha Capital is what I'm using. In past phase 1 in 3 days, phase 2 in 1 day, 1 trade. And I got the live account and I traded it. And Monday, I made $5,000 in 1 trade. So that's the trade I'm gonna be breaking down today. I actually finished trading today too and closed out 3K, but I'm not gonna be breaking down that trade. But a lot of people always ask me how I do that, how I always, passing accounts in 1 trade and all that. And it's simply because of my risk to reward. My risk to reward is very high. With my strategy, I've made it myself. I call it structure point trading. It always allows me to get high RR, like 1 to 10s, 1 to 15s, 1 to 8s, 1 to 7 every single day. Right? And the main reason why I came up with this, I would have been profitable. I'm going on a little rant here, but I would have been profitable like a long time ago if I just followed somebody's system. But the main reason why I diverted from that and built my own trading strategy is mainly because if you go on the internet, you always see these traders taking 1 to 1s, 1 to 2s, 1 to 3s, 1 to 4s. 1 to 5 is a big day for them, right? But what a lot of people what a lot of people just see is the cash, right? So people just see $60,000 in a day, $50,000 in a day, but they don't look at the RR. If you look at the RR, it took them, they had to risk $20,000 to make that 50K, and that's under a 1 to 3 risk to reward. Now for me, who don't have $20,000 to risk, right? It's gonna take me decades to reach to that level. So the way you can cut out all that, years to get to that level is having great risk to reward. And so I developed my strategy for myself that allows me to get those high risk rewards every single day. For example, a $20,000 risk for me, nice 1 to 10, which is very easy, catch that all the time, be a 200K winning day. You know what I'm saying? So we're getting there slowly but surely. But today we're gonna break down the trade. I'm not gonna break down the one that I made 3K in today. I'm gonna break down the one that happened on Monday that I made 5K in. So that little rant out of the way, without further ado, we're gonna get into the video. And hope y'all learned something to put into y'all piece of the pie in your trading and whatnot. And yeah, let's get into it. All right, so let's get the breakdown started. This is today's trade, running straight to take profit for a 1 to 11 risk to reward. And that's what I'm telling y'all about, bro. Your mentors ain't getting this, you know what I'm saying? They good at 1 to 2, 1 to 3, they capped at that. You know what I'm saying? We out here catching this 1 to 13, 1 to 12, 1 to 11 RR, my bad. I post this up on my Instagram as well. That's why I say, yo, go get tapped in with my Instagram. But yeah, let's break down Monday's trade. That's where it's at. All right, so let's go on the daily time frame to see. I always, before I go down on my chart and try to take any positions or try to apply my strategy or anything, I always do a top-down analysis to see where the overall market, what the overall market is doing, right? So overall on the daily time frame, this was the Monday. Yeah, that's right. Which was the Monday? Yeah, this was the Monday, right? Overall, we could see that strong bearish momentum. Overall, we're on a downtrend, right? Switching from that uptrend momentum, we had a lower high right here, and price with this daily candle on the Wednesday completely demolished this low right here at 20,200. So seeing that price made, making strong lows, all that type of stuff. My bias for the day was mainly sells, right? But if we just simply use simple price action and just start to read the chart, you can see what price make what highs, we had lows, higher lows, lower lows, higher lows, lower lows, and market was around this point around here at when I was starting to analyze the market. So I was looking for either one of two things to happen. Either price could come back up here if it came up really fast and everything, depending what time it is in the session, I'll be looking for take sells, or I'll take some buys, right? Scalp some buys or something up from this area up into this area, and depending how the day, what time is it in the day, I would either be done for the day or either look for another entry to take it down, right? So seeing all of this going down on my intraday time frames, mainly my 30-minute time frame, a 15-minute time frame, those type of things, I looked out for some structure points, some key structure points that I was looking for price to come down into for me to take my entry, right? For me to take a sell, a buy position. Let me make this all clear as well. Now, coming into the New York session around right here, right at the beginning of the New York session when price was on this intraday level, I was initially looking for sells, but that's why we got to know how to read structure, right? On the lower time frame, we see what? We saw lows, a high, right? Double bottom, price broke this high, had higher low, we had a higher high, right? So I was expecting, before I was looking for sells, which happened, Tuesday, Wednesday. Before I was looking for sales, I needed a change of structure, right? A shift of structure, right? And that wasn't being presented here. So when price came up into this intraday level, I was no longer looking for sales. I was on a buy bias simply because the lower time frame, like the 30-minute, didn't change structure towards the downside, so I could hop into some sales. You know what I mean? Like the simple price action was still showing what? A bullish momentum. Higher highs were getting broken. You know what I'm saying? No lows were getting broken. So simply watching price action, right? So around when New York session opened, I looked for my structure points, and this was a valid structure point. Now I'm gonna make a video soon. I'm showing how to identify valid and non-valid structure points, because there's a way about it, right? And this was the structure point that I liked. Out of all of them, this one was valid as well. So this was the one I was rocking with. So I was waiting for price to come down into the structure point before I make any move, right? So when price came into this with this big candle right here, when price came in and hit my structure point, hit my alert that I had there, I didn't do anything as yet because this candle didn't show me anything. It didn't show me any rejection. It didn't show me any break off of the structure point. It didn't show me anything. So I was just waiting for another 15-minute candle to close. And here at 11:30, we had our 15-minute candle closure. Wait, 11:30, that means the candle closed 11:45. So at 11:45, we had this candle closure right here, and it showed rejection to my structure point. Now, seeing this is when I went down to my 1 minute, 5 minute candlestick, my 1 minute, 5 minute time frame to get an entry. And my brain be buzzing sometimes. Right, so I always enter my 1 minute, 5 minute. That's how I get those sniper entries. That's how I get those big risk rewards. A lot of people scare away from the 1 minute time frame and scare away from the lower time frames just because they simply don't know how to use it. A lot of people say 1 minute time frame should never be used. But that's not the case in my terms, because once you know how to tame the dragon, you know how to use it, you can use it for your advantage, right? So 1 minute time frame, so 11:44, that's when the candle closed. 11:44. Okay, so this was when the rejection closed, right here at this candle right here. Make that known. Right here, this doji candle right here, that's when the candle closed, right? So this was the live market for me basically, and I was wondering where I should enter from a buy position, right? Now after this morning star pattern that occurred right here, right, you should know candlestick patterns. I'm not going to go over those in these videos. There's only like a few of them I use. I don't use all of them, but this one here is one of them that I use, a very high probability one, a very, high confluence one, the morning star pattern. So see, the morning star pattern formed. I started to scale in some positions. All right. There's one of my first entry was at stop loss. Was below these lows right here. What a tight stop. Yeah, that was it right there. And where was my TP? Now I always use Fibonacci to get my TP, right? Oh shoot, price is running. That's nice. From this low here to this high. So I always draw my Fibonacci from body to body, from blue to black. That's a whole different video. I can go over a whole different time. I ain't trying to make this video too long. I'm just doing a little trade review. You know what I mean? So this was a 1 to 7. That means my stop was a little bigger. Yeah. right? And this was the first entry, right? So remember how I tell y'all I'll be getting the big 1 to 15s, 1 to 14 trades, and all of that. Now, how I simply do that is by one, getting great entries, and two, having great scalings, right? So I think I'll go over this again, but I'm gonna go over it. I'm gonna say it again just cause. People always ask me, yo, if you scaling, isn't that, you know what I'm saying, making your risk more? Therefore, how are you getting a 1 to 50? How is your, you know what I'm saying, that don't make sense. You're scaling, you're putting more money behind your trade. Wouldn't that increase the risk? And I said no, because there's a way how I scale in, right? For example, you're taking a sell position. This is your first entry, right? This is your first entry for your sell position. Now, if you scale in and do like this, like for example, you saw some other skin opportunity here and you did this, then yeah, you'll be increasing your risk, but you'll also be increasing your reward. Now, I scale in at very strategic points in the market that allow me to move my stop loss in profit for the second entry, basically, right? And what that allows me to do is increase my reward, but keep my risk the same, because this stop loss here is going to be moved down into profit at this at the second entry take profit, at the second entry stop loss, I should say. So therefore, the max I can lose is still that $100, but my reward, let's say if I was risking $100, for example, right? The first entry, $500 of a 1 to because I'm risking $100. First entry, 500, right? Risking 100. The second entry would make my with another 1 to 5 would now make my reward $1,000, but still keeping the risk at around $100, simply because this stop loss is in profit and this stop loss is only risking the $100. Understand? So basically, my reward has increased, but my risk has been is the same. So basically, this trade idea here went from a 1 to 5, right, to a 1 to 10 RR. Got it? Because our risk is still the same. As a matter of fact, our risk has even lessened, because this if price stop out this trade right here, which the stop loss is in profit, right, that's going to take off some of the blow off the $100 loss off this trade. So in some cases, for example, if you scale in down here, right, and you had this stop loss here in profit here, that's a risk-free trade. Even if this trade lost $100, this trade still got stopped out here for about a 1 to 1 to 2 almost, right? So basically, you haven't lost any money. So when you're scaling like that, it increases your reward and also keep your risk the same. So right, so just to make that clear. So this was the entry around here. Let's get back to the trade. This was the entry around here, and where I scaling, I had a scaling point. I'm not gonna go over how I scale in or how to find valid scaling points, because that's gonna be very long of a video. And long story short, I scale in with some positions here, right? Bam. Which now turned this trade from a 1 to 7 risk to reward into a 1 to 14 risk to reward. But I came out a little early. I came out at around a 1 to 10. I was good with $5,000. So this was the overall trade on Monday. Yeah, just a quick little breakdown so y'all can understand a little bit more inside of my version 3 strategy that I've made. More in-depth videos will be coming soon, y'all, so I can really go deep into the strategy and how it really works and how I identify structure points. Because the key thing of the strategy working is identifying good structure points and good scaling points, right? Same with today. We identified some structure points. Well, price was already in a big move, so we couldn't take any trade off the structure point. We actually took trade today off the scaling point right here, and 1 to 11 RR. If I had scaling in this trade, I'd have probably caught a 1 to 20 risk to reward, because I have caught those before, 1 to 20, 1 to 30 RR, but those don't come every day, right? So yeah, I'm gonna make some more in detail videos of how to identify proper scaling points, proper structure points, because my whole strategy is based off catching proper structure points and catching proper good scaling points, right? And also you have to know how to obviously mark up structure, know how to find good intraday levels, know how to find good daily levels, because overall the market moves off these strong areas of resistance and support in the market, right? So there's a whole lot of things to cover in my strategy. It's not just as face value as you see it here, as how I make it look, because it's very easy for me because I've been doing it for a while now. But just stay tuned for those videos, and when they come, you'll definitely not regret subscribing if you're not. So yeah, if you're not subscribed, you're gonna miss those videos and you're gonna regret it. You know what I'm saying? So yeah, just stay tuned. I'm gonna try to be more on YouTube a little more often. And yeah. I didn't show y'all the proof. So the proof of the trade will be somewhere in this video. So yeah, man, I'm gonna just have this trade holding out here. I already closed $3,000 out of the trade, and we gonna see where the rest of this trade runs if it hits take profit. So yeah, 1 to 11 RR. Yeah, you were meant to not catching that. I'll see y'all, bro, next video.